Hi again, and welcome back to your Weekly Market Outlook. This is for the 30th of June, 2025. And let's take a look at last week's number here. And I think we want to focus on the PCE numbers from the US. We did actually saw the numbers come in 0.1% above the consensus there. Year-on-year PCE numbers has also year-on-year core PCE numbers has also gone up by 0.1% there. And if we take a look at the breakdown here, we actually saw a negative on income as well as negative on spending. So I think impact on tariff is starting to be seen from the PCE numbers. Do keep in mind the PCE numbers that we saw last week, that was for the month of May. And obviously this would kind of put a lot of impact on what the FOMC is actually going to be doing. And we had that testimony from Powell to Congress and Senate. And what we get is basically the same thing that we kind of expected, that they are not able to do anything much because short-term inflation might go up a little bit. They might sound a little bit more on the dovish side, but they still point out that it's too early to start cutting interest rates. So that's basically what happens there from last week. And this week, we do get a little bit of an indication into how that PCE numbers could actually have an impact onto the labor market. If we take a look at the NFP numbers here, the consensus is actually going to be for lower NFP numbers, 139,000 previous month. We're looking at 120,000. We're also expecting a little bit of a push higher on the unemployment rate, 4.2 to 4.3%. And again, this is for the month of June. The PCE numbers was for the month of May. If we're looking at negative numbers in May, when we take a look at the June's PCE number, that could also, give us a little bit of an indication into the future of the labor market. But it currently points to a further increase in people losing their jobs in the US. So I think that's some sort of concern there. And also do keep in mind that the release for the NFP numbers as well as the unemployment numbers it is actually going to be on Thursday, because it's 4th of July on Friday in the US. Obviously, that's a public holiday, Independence Day in the US. We also got Canadian Day. That's going to be on Tuesday. So just keep in mind, market is actually going to be a little bit on the quiet side. Also, Bank of England, Bank of Japan, as well as the FOMC chairmen are actually going to be speaking on Tuesday as well. So it might move the market a little bit, but I think the main focus is actually going to be on the NFP numbers. A lot of stuff is also likely going to happen this week with Trump, probably getting desperate with his, last week before his deadline kicks in. So yeah, it might put a lot of pressure there. And also the big beautiful bill is supposed to be passed before the 4th of July there. So we're expecting a lot more market volatility this week as well. All right, let's take a look at the currency market here. The Aussie USD is now back inside that range there between 64 and 66. Again, we're not looking at any major changes happening with the Australian dollar here. Pretty stable there between 64 and 66, pivoting around 65 cents on the Aussie. Everything else on the momentum is pretty much neutral. RSI stochastics at neutral. This is currently not trending at all. If we take a look at it from the Ishimoku perspective, though, this is very well supported from the Ishimoku cloud. Huge cloud there between 62 all the way up to 64 cents as potential support for the Aussie. So I think this is a stable currency at this point in time. The euro continues to grind higher. Currently meeting resistance just shy of that 1.18 level. So we are currently looking at that 1.18 level as a major resistance for the euro this week. In terms of support, we are lifting our support now to 1.15, which is the 2022 high as well as the resistance there. We have broken that level and now tested it as support last week as well. So overall, very well supported on the Euro USD side of things. This is still looking pretty bullish. The sterling, though, extra bullish here. And what the main reason is because the UK has struck a deal with the US, so they're pretty much off the whole tariff issues. So that brings the case for the higher sterling here, stronger sterling here. And again, If we take a look at the support here, it has now been lifted. We got 4 order blocks at the bottom there. No order block as a resistance as of yet for the sterling. So we got 4 key strong supports all the way down to 1.23. But yeah, the current support is going to be located at 1.34 to 1.3450 level. That's where we have the latest order block, and that's going to be in line with where the Ichimoku cloud is currently positioned as well, and also the weekly pivot where the support one is currently positioned as well. Resistance 1.38, 1.39, and once we clear off 1.38, 1.39, there's actually not a lot of resistance on the sterling here. RSI stochastic still points for a strong uptrend on the sterling. Fundamentally, very well in a strong position, unlikely to be impacted too much by Trump's tariff indecision at this point in time. All right, lastly we have the Dow Japanese, and this one here is in a symmetrical triangle. The symmetrical triangle has basically been confirmed last week, and the formation of that symmetrical triangle, if we take a look at how many bounces it has, this is now a textbook symmetrical triangle. This has been developing from the end of March all the way up till now. So that would put this in a 2 months, nearly 3 months old symmetrical triangle. And you can see the range there getting smaller every single time. And yeah, at around the Ichimoku cloud here, waiting for a potential breakout. So we should be looking at a breakout on the Dow Japanese, and a really big move happening here. Possibly this week or next week, but yeah, time's running out on the symmetrical triangle here. We are at the very end of that symmetrical triangle. Also at around the Ichimoku cloud, we have a strong order block there, 143, 144. Below that order block, we have that 140, 141 to the upside. There's actually just a couple of resistance. 147 is probably not going to be a strong resistance. We have a much stronger resistance at around the May high there, around 148.50. But the main major resistance is going to be at a psychological level, 150, 151 for the Dow Japanese yen. So just keep in mind, because this is a symmetrical triangle, it is very neutral. Looking at the stochastics and the RSI, this one here doesn't have a trend. Just waiting for that breakout to happen, and we're right in the middle of the range there. And in terms of key order blocks, we got that 140, 141 to the downside if it does break out of that symmetrical triangle. And on the upper side, we've got the 150, 151 level, 150, 151 as our resistance. So just keep in mind, if we do see that breakout, we have a resistance and support to work with. Okay. All right. So just again, a reminder, non-farm payroll and the unemployment numbers, the labor data from the US is not going to be released on Friday. It will be released on Thursday. So, make sure you get this right and don't get caught off guard with that shift in the calendar. All right. So with that, good luck to your trades, and I'll see you soon.